Welcome back to Markets Today. I'm your host, Mbithe. This week, Kenya, our team here at Metropole TV, as well as the world over, is celebrating and appreciating customers. Well, for us, we have been doing this since June 2019. You have been supportive, watching us, giving us your feedback, giving us your questions, and we can't even begin to extend our appreciation to you. But from myself and the team here at Markets Today, as well as Metropole TV, asante sana for working with us this journey for the last 15 months. Asante sana for even inviting other people to come and watch. We can't begin to express how appreciative we are, but we would like to just give a small little token of our appreciation. So if you are watching us, tell us, who was our guest yesterday? What was your takeout? And we will be able to extend a very small gratitude of 1,000 shillings so that you can be able to spend today as we get into the weekend and say, I learned something, I gained something, I can be able to spend over the weekend. We have put out something there, and my producer is able and available on standby to hear from you. So that's 20146. You can reach out, or you could reach out to myself or to Metropole TV or Mbithe on Instagram, Twitter, or Facebook. I hope you can be able to indulge us, and truly, 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 from our hearts to you, thank you for your viewership and your consistency in terms of being with us. Now, let's take your questions for the day. We have the questions coming right up. We have been able to answer 5 questions, or we will be looking at them to see what do you want to know. So as I wait for our first question to come up, we have our first question there. And this is from Kubai from Kakamega. Kubai says, hello. Hello, Kubai, to you too, and happy customer week. Hello, and at what point can I make losses on the NSC apart from selling shares lower than the purchase price? Are there any hidden charges? Kubai, first and foremost, you can be able to lose money on the NSC if you buy here and the price goes lower. That's more or less how you lose money. Second way of losing money is if the company delists. So for instance, if you bought TransCentury at 50, now it's trading at 1 shilling and a few cents, you've already lost money because the price has come off. But if this company leaves the market, you don't have the opportunity to be able to sell out of that position. So if a company delists, or if it goes bankrupt and it's no longer available for trading, you can lose money. There are no hidden charges on the NSC. There is a fixed sum that you pay for brokerage to access the market. As a retail investor, you'll pay anything between 2 to 3 percentage points for the value of the transaction that you are doing. If you trade 10,000, you'll have to pay 3% of that as part of the trading cost. If you sell shares valued at 10,000, you have to pay 2 to 3 percentage point as part of that cost. That's an all-in cost, and there's no other cost such as holding your shares. That's a service that's offered by the CDSC, and there's no charge affiliated with that. It's covered at your entry or exit price points. Let's see what the next question is. Okay, so this is Kahuthu from Thika. Kahuthu, habari yako? I hope you can invite us one day to come and say hello to you and your friends in Thika. But today, let's answer your question. Kahuthu says, hi, how can one acquire knowledge to know the best stock to pick? He has invested in Kenya Airways and Kenya Power Lighting Company. Well, Kahuthu, what we have been doing here at Markets Today is covering companies on a one-on-one basis so that you can begin to understand what are the key things that you need to look out for. From a bare minimum, you want to pick out the price list and understand where is this company trading and what is the volume of shares that have been trading. Second thing, all these companies have a platform in terms of a website. They are online. Go to their website. Most of them have an investor relations page. Try and read and understand, what does this company do? Basic, you want to know, does this company make profit or not? Because how you make money is if it makes a profit, then it can pay you a dividend out of those profits. I can see you have invested in Kenya Airways and in Kenya Power and Lightning Company. And I think at this point, you've probably lost money because Kenya Airways is in the process of getting out of the market. And this company went to as high as 100 shillings per share. Then it came down and traded in cents. That similar scenario has played out on Kenya Power. What I would say is Take your losses and let that experience of loss be a point of learning for you. This is how I look at it. If you say that you lost money in Kenya Airways and Kenya Power Lightning and you will never invest again, then you will lose out. I think what you should do is take a step back, Mr. Kahuthu, and ask yourself, what is it that I didn't pay attention to? And I suspect what happened for you as with other people is you didn't pay attention to when Kenya Airways started making losses. Because by the time it was getting to 100, it was growing its revenues and it was profitable. Then it started being negative in terms of its earnings. It started reporting losses. So first and foremost, when a company starts to report losses, that will translate to the price. Kenya Power, you've seen the half-year numbers. They're only about 10% of the earnings that they made last year. This company was trading at about 14 shillings in the 2014 period. Now it's a paltry performance compared to where it was at. So take this pain, accept the pain, process the pain. I know those are not words that we hear when you're talking about numbers, but you need to process the pain and ask yourself, what did I miss? So that you pay attention and not miss red flags. You want to buy a profitable company. You want to buy a market that has liquidity on the exchange. You want to buy a company that is able to and has been paying a dividend, and there's a high likelihood that it could continue to do that for you. And finally, you want to buy a company that whatever it's selling in the market is still wanted in that particular market. And finally, you want to avoid companies that have debt, because if they have debt, when they're not able to generate revenue, it becomes a bit hard for them to manage their operations. I hope this pointers can be able to help you, Mr. Kahuthu. Let's see the next question. It says, hi Mbithe, please explain to me what is a share, the types, and how, where, when one can buy a share. A share, simply put, is getting a percentage of a company. I like to look at a company as a big cake. Shares are the small little pieces of that cake. How you get access to that share is if you go to the NSE, you say, I want to buy one piece, and you get it at that price. That's how you effectively look at it. Because when a company registers, if you go through the registrar, you'll have to put up a nominal share base and put up capital to start that company. And then if it moves from the private space into the public space, then the shares, the number of shares that actually make up the company are what are available to you as a possible investor. So you say, I want to buy one share at the price that's listed on the exchange, you buy one share. How you trade in Kenya today, you can buy shares in your friend's company, that's in the private space, or you can buy shares on the Nairobi Securities Exchange. If you buy on the Nairobi Securities Exchange, you need to buy a minimum of 100 shares, then you multiply that by the price. Let's look at shares such as the penny stocks. There's some stocks that are priced at 2 shillings per share. If you need to buy 100, that's a minimum of 200. There's some stocks that are very expensive in terms of the absolute share price, and you could find them at 350. So if you wanted to buy 100 shares, that's 35,000. How you get access to this is you have to open a share trading account on the Nairobi Securities Exchange. There are a couple of brokers that are out there and they are available to you. Some give you the mobile platform, some allow you to trade on the web platform, online rather. So it's better for you to find the ones that actually have a mobile platform and you can be able to open with them. Opening a CDS account is as easy as go to the NSE app, pick the investment bank that you want, go to their particular website or their portal, put in your details there. You'd need your ID, a copy of your passport photo, your PIN certificate, and once this is authenticated, then you can open it. It's as easy as opening a trading account. You can do it from the comfort of your home, and on your phone, you can execute. Let's see who else also has a question for us today. It says, Metropole, thank you for teaching us about the stock market. Please send me a step-by-step on how to open an account and how to start trading. Okay, I think this question has come out also again, but what we will do is hopefully by next week on Friday, we will have a step-by-step graphic that shows you step 1, step 2, step 3, step 4. Then let's see what the next question is. Then discuss the Retirement Benefits Authority mandated pension scheme for the informal sector workers. So what the Retirement Benefits Authority is trying to do is to say if you are in the informal market, there is a product available for you to put money aside for retirement. Currently, the way the market is structured is mostly the people who have access to pension fund assets are the people who are employed. The individuals tend not to have it. Some of the companies have actually started introducing to the market individual pension plan schemes where you make regular payments. Now, the thinking for the Retirement Benefits Authority, looking at the informal sector, they're saying that people in the informal sector might not be able to afford to make regular payments on a certain date, but they are more willing to be able to allocate money when they get it. So the thinking here is, let's have a product that does not confine you to, say, putting aside 5,000 each and every single month, but that allows you to put aside whatever you can afford to put aside for however long that it takes. That's the rationale for this. We also went out to the streets earlier this week. We met a few individuals, ladies and gentlemen, and we asked them, what would you like to know about shares? Our team was able to facilitate this, and let's see what we were able to glean from the markets.
Hi, Metropole TV. My name is Andrew. I would like to ask which is the best company to invest in during this corona period, and what advice can you have to give me concerning stocks and bonds? Yeah. And also, what returns does one get per year or per dividends on the stocks and bonds?
Okay, that's Andrew who's talking to us about what next after coronavirus. In other words, now that we have gotten through the worst part of the pandemic, hopefully, are there opportunities to invest? And secondly, Andrew wants us to be able to elaborate. How can he be able to get a return from stocks and shares? Andrew, thank you very much for your questions. Let me answer this. When we were in the corona period, cash was king. Investors preferred to hold on to cash because nobody knew what will happen with corona. At that point, people were either putting money in fixed deposit accounts, savings accounts, money market funds, or treasury bills. Now that we're sort of getting a semblance of how we expect the economy to operate, in other words, the feeling is that the worst is behind us, then people are willing to put money aside to other investment classes. Yesterday, the government of Kenya, through the central bank, had the auction for the treasury bills, which was the 91-day, 182-day, 364-day T-bill. We saw investors move their preference from the 3-month investment opportunity to the 1-year investment opportunity. The return that you're getting from the central bank is 7.7 percentage points. If I stick on that particular point, how can you then invest in these papers that you can get that return? First thing, walk to any Central Bank of Kenya branch. They have branches in the major cities in Kenya. There's one right here in Nairobi. And people say, how do I walk in there? Because kuna askari anasema leta fujo uone. But they're very friendly. You walk to the entrance, you say, nataka kufungua a trading account with the Central Bank of Kenya. They give you a physical form. You take it back to your bank. 2 bank managers fill it in. You take it back. Something that you can do in one afternoon. Actually, if any one of you watching wants to do this, why not come and join us next week on Tuesday? We'll see if we can do it in one particular afternoon, but let us know that. So you do that. When you open, then you can connect your account to your phone, and you can also get email alerts. You will be notified when there's an auction coming up. You will be invited to make a bid, and you can be able to invest directly with the government. The only caveat that comes in when you are looking at treasury bonds is if you buy the treasury bills, which is any paper issued by the government with a period of less than a year, or if you buy the treasury bonds, any paper issued by the government with a maturity of over a year, you have to wait for it to mature. This is why. If you buy a 364-day T-bill, you have to wait for a full 1 year before you can get your money out. Why? Because there's no active market to be able to trade this particular investments that you make, especially as a retail investor. For you to trade in this market, you probably need a portfolio of 100 million or more. If you feel that you're not sure that you want to hold on for that period, or secondly, you don't have the minimum amounts, because for the treasury bills, you need 100,000 minimum or 50,000 for the treasury bonds, then you can look at the next class, which is the money market managers. The money market managers are collective investment schemes, and what they do is they collect money from different people, put it together, then they make that investment in the government. Today, we have 13 of them, and the average return we're getting from them is 8.5%. So you're able to pick one money market manager, open an account, most of them are available online, open that account, put in your money. You can put in as little as 1,000 for some, as little as 3,000 for others, as little as 5,000 for others. But the beauty about this is in case you need your money after a month, 2 weeks even, or even 6 months, you can be able to go and withdraw your money with a notice of 3 days. The other option is you can also put your money on Mshwari in the locked savings accounts, and you need 48 hours notice to be able to get your money back. It's important to pay attention to this interest rates that we are talking about. Government of Kenya, 7.7%. If you're going to put money in a money market, the average return, 8.5. When I speak about these numbers, most people are like, okay, that's a very low return. And yes, you are right. It takes time, it takes discipline and patience to grow your money. Because what we are saying is if you invest 100,000 with the government, at the end of September, rather October next year, you'll get a return of 7.7%. That's 7,700 shillings only. It takes you 12 months to earn that. Do you know how much that is in terms of hours? I do. It's 8,760 hours to get a return of 7,700 if you've put in 100,000. Hold on to that thought, because on the flip side, if any of you are watching and you're planning on going on a date, I can assure you that in 1 hour, utakuwa umekunywa Coca-Cola, ukakula chips, ukakula chicken, ukakula ice cream. In 2 hours, you can easily blow 2,000. For some of you, even in 1 hour, you can spend that 7,000. Yet, on the flip side, it takes you 8,760 hours to be able to earn just a paltry 7,000. I share that to tell you that what you have with you is time. Start early to invest, then that number keeps growing over time. Second thing you need is patience, because the reality is those opportunities that double your money are far and wide. They are risky. They are there. Certainly in the United States, we've had stocks doing extremely well. If that's an option that you want to explore, I would really encourage you to do so. Get the right partners to know, how do I get in and how do I get out? There's stocks that have given a return of 1,000 times over just in less than a year. But just looking at 7.76 as the benchmark in Kenya today, you want time, you want discipline, you want patience, and really what is separating you from becoming wealthy is just you appreciating that it takes a lot of time. So whether it's stocks or it's bonds, that's what you need to consider. Let me answer the second part of Andrew's question. First part we've answered in terms of how do you make money from bonds. We've been able to elaborate that and how to access this market. Second way, Andrew, that you make money is if you invest in stocks. You want to buy low, sell high, or you want to buy a stock, hold it for a period, and then it gives you a return by virtue of dividends. For you to participate in these stocks, in the context of Kenya, you need to open a central depository settlements account, that's a CDSC account, and you open this through a stockbroker. Once you open, you put in your order. I want to buy a minimum of 100 shares multiplied by the price. This is how you make money. Safaricom at some point during COVID went to as low as 25, 24 shillings per share. Now it's at 30 shillings per share. That's already 6 shillings that you have made, about 25% return. Equity went as low as 28, went all the way to 37, now it's at 34. I give that example to show you that you can buy low. If you're not careful at the point that you're going to exit high, you can end up sort of oscillating back and forth. In other words, shares are a high risk opportunity, high return opportunity, and because of the risk affiliated to it, you want to pay more attention to what is happening so that you can be able to see opportunities and execute on them as they arise. I hope that answers your question, Andrew. I think we can take another on the street perspective at this point in time.
My name is Nancy Atieno Obutu. Na sai kama venye kuna hii shida ya corona, sisi tunajiuliza sasa utaanza biashara gani? Juu kila mtu analia biashara inaanguka, na sasa juu hatuna biashara, pia tuwezi save. Ni ngumu pia kusave, na hata tunashindwa tutasave wapi, tutaanza aje?
Tunashindwa tutasave wapi, tutaanza wapi? That's a sentiment that I hear each and every day. One of my friends gave me a different perspective when it comes to saving. And he told me this, Mbithe, do you enjoy your lifestyle today? At least most of the time? I said, yes, I like looking good. I like dressing well. I like being able to stay in a good apartment. And I like the way my life is, and I'm grateful to God for it. Then he asked me, do you want it to remain the same in 30 or 60 years? I said, yes, I would. But he asked me, do you think the energy that you have, the opportunities that you have today, you'll have them at 60? Of course, I said, if I work out, I'll be able to do this. But the reality is, when I look at my mom today, she doesn't have the same vigor as I do. She doesn't have the same energy as I do. She can't run around. If you also look at your older parents, just trying to get them WhatsApp, Facebook, it takes some time to do that. Thankfully, my mother can. But just to show you, when you're saving, you're putting money aside to invest because your future self needs it. If your mindset says, I can't afford it, try and imagine if you can't afford it, how will your future self look like? That's the first thing. The second thing, put aside 10%. Make it a habit. You start with your 1,000, put it aside, 10%. When you get to 100 million, put aside 10%. And because it's so painful to invest, to put the money aside, then start thinking, what can I do to be able to then put this money into an investment and think about my future self? Now we're almost coming to the tail end of this conversation. And we have a winner. I can see Mr. Bernard Oluoch, who has reached out to us on Facebook. Let me stand up and clap for you. Bwana Bernard Oluoch, well done for reaching out to us. So what we do have today is Bwana Bernard Oluoch says that yesterday's guest was Reginald Kazutu, very well. And he says that his takeaway was the discussion was that never replace one stream of income for another, especially if you can do both successfully. Bwana Bernard Oluoch, thank you so much for your feedback. This is well written, well taken, and I hope we were able to challenge you to start looking for an alternative revenue source. For today, you are the winner of our Customer Week, and we ask you, please give us your number on the same platform. We can be able to reach to you and give you the 1,000 that you have rightfully earned from us. This is the end of our time today, and my name is Mbithe. From our team here at Markets Today on Metropole TV, we want to say a heartfelt thank you. You have worked with us from June 2019 to date. We don't take it for granted for your time, for your audience, for your feedback. So from our heart to yours, thank you. From our producer to you, Bernard, we will be able to extend that token of appreciation because it's very hard for us to come and say, this is what we owe you. But thank you so much for your time. We hope to continue to engage and to be able to grow even stronger. But more importantly, we want to grow not only in what we know about money, but we want to grow in our actions. Our hope, our desire is come the year 2030, we can be able to say, we started here with 1,000, now we are at 10,000, or we started at 1 million, now we are there. And in the famous words of this song that we all know, can we say, we started here, now we are? We started there, now we are here. That's our hope, that's our vision for you. Enjoy your weekend. Thank you for your time. A happy Customer Week from us all, and hope to see you same time on Monday. Kwaheri.